Good afternoon, everyone. Welcome. It is Tuesday, October 21st, 2025, ETF edition of Trading Trends. Some really interesting things happening today. Usually happens in the market. Gold with a huge puke lower, 3 standard deviations. We said when the group moves, it's going to move, and it's going to give you an opportunity. We'll see if it's there yet. A big move, down 6% in gold, and the gold miners were down more. We'll take a look. We said this would happen as well last week on Spaces. We were on it today, still speaking about the metals trade. And we'll take a look at the macro too. SPY, I think Apple closing at all-time high today, very bullish. We were waiting for the sleeping giant to do something, and of course now it has, and that's very bullish, very bullish. One of the biggest constituent in you and your grandmother's fund is at all highs. That's a very good thing, and it quietly has done it. So let's take a look. Gold off 6% today. The metals trade, like I said, 3 standard deviations lower, a massive move lower. We'll look at all of the meaningful charts. Don't want to turn us into the metals show, but we'll look at it for quite a bit. But also a big move today, not a big move, but a nice appreciable move in home construction, discretionary, and industrials all up 1%, new all-time highs for the Dow Jones Industrial Average, 47,000 for that, and all-time highs for the DIA. So things look wonderful for under the hood here. Let's take a look. Let me go as I usually do in the panel. If you have to hear something, put it in. And if you like what I'm saying here, subscribe. All right, let's go into the panel. Let's take a look. A low volume day overall in the indices, 45 million, 46 million SPY, typically trade around 80 million, 20-day average. A lot was in the metals trade today. We'll take a look. Again, SPY was flat on the day. That is -0. Tesla shed 1.1%. The stock looks great, one of the best in the market. We were waiting, as long as that 330 holds, we have that target on Tesla to pull it to the upside just with Mag 7 momentum and being in the right spaces, and it's worked out. 443 today on Tesla. Gold down 6.5% nearly. We'll take a look at that one. Pretty big volume. Google down almost 2.5%. AMD look down 1%. Google and AMD look absolutely great. ARK and spec stocks look absolutely great here, as does Bitcoin. I don't think we'll get to those charts. I want to mention it here. Amazon up 2.5%. Stock that is coming along. That's going to be a catch-up trade. I like Amazon as well. Any catch-up trade, because every squirrel gets a nut. All of these basically are calculated on closes above moving average with rising momentum. They're all buys of some form. The closest one I had to get to a loss here is CRM, Salesforce, and they came for that today, up 3.5%, and that stock is on its way to a catch-up trade. So there are all kinds of strategies that are working here. And then I'll look at another move lower. We talked about Google down 2%. Ibit up 1%, although it was up more. And then we'll close with that. We're just looking at this from broadly. GDX down 9.5%. The GDX gold miners, the bigs, and Broadcom down 2%. All right, so the intraday action, like I said, low volume. We peaked at 12:30 p.m. at 673, getting very close to our all-time highs. Like I said, the Dow did it. And really, we held decently up through 3:30 p.m., holding above VWAP. It looked very decent. And then into the close, a little bit of a flush. That got us to that close negative. We were up, though, on the day, similar to a Dow, which closed up 50 bips. So our VWAP was 671.70, and we sold off below that end of the day. As I zoom out here, I think things look absolutely great. This seems like, to me, ancient history. It was just 11 days ago, this massive bearish engulfing candle that sent us down 2.7%. Really want to see what was going to happen there with that big flush. We obviously got super excited at the market. We kept on moving our targets, if you recall, each day. 670 looks like the market was going to 672, 673, yada yada. It finally got to 674 on October 10th. And sometimes when you drink a little bit too much, sometimes it comes out a little bit, and sometimes you vomit instantly. And that's what happened with the market. It puked on pretty high volume March 10th. Whoever didn't want to be out got shaken out to a bit, all the way down to that 50-day moving average. A great discount if you were quick and nimble on October 10th. I congratulate you. We haven't had anywhere near that kind of a sell-off since August 1st. I look at the dip in the RSI. They came in, it got to 42 RSI, and they picked it right back up. And look at where we are today. They sent it to 673, and they did sell it down, close it a little bit lower, hence why you see that doji. All that being said, I'm very bullish. I love Apple closing all-time highs. Are you kidding me? Really not much more to be said about that. It's a major part of your index and SPY, the chart we're looking at right here. This looks like the market is now in a bullish accumulation phase as I zoom out here, and it looks like we're going to be bullish through on or around November the 2nd. So a little bit after Halloween, early into the following week, I see the bullishness ending right around 685. So the prior high is 674. I see us getting right here to 685. Maybe China resolution. Obviously, tech earnings are beginning right now. I think Netflix is today, and you got Microsoft and the bigs coming up. So I think there is a nice setup here. I love the clean rejection off of the 42 RSI here, balance equivalent of the rising 200-day moving average. Still, just a great looking chart. 685, like I said, targeting November, whatever that Monday is, November the 3rd is what I'm looking for here. And again, our basing in terms of where a good entry opportunity is for the next several days, because I think the train is leaving the station again, albeit with a little bit of volatility. It's going to be right around that 664 mark. 1% lower from here is where you have a really, really good entry on your way to that 685 target. And if things get ugly in terms of some kind of a sell-off, I don't expect them to. That should take it to the 650 level. Again, I like that support there. Seems pretty obvious to spot. All that being said, I love what I'm seeing in the markets here. It looks clear to me. We're back to 58 RSI. Also, you got the bonds. They come for the bonds. I said when will something with no earnings, company earnings, like bonds, start to make a comeback. And the IEF, AGG, LQD, all those ETFs that are fixed income oriented are making 52-week highs today. Again, higher bond prices, lower yields. I think it's a tailwind for the market. It takes us higher. Let us take a look into the charts of the day and of the week. Let's take a real good closer look at these big charts of the day. So let's look at the ones that are up significantly. This was a big move today in a flat to down tape, depending on what you're in. The home construction up nearly 2%, 1.75, a very interesting chart. I was looking at the JC Peretz put out chart the other day saying something to the effect of, did you notice the homies held in exactly where they had to, more recently on this cut here? And I don't disagree at all, even though they did get oversold on October 10th, that flush that we were just talking about. It held just basically right around par, call it 100, which is its 200-day moving average, 99.5. And now it's in a pretty messy area with a lot of moving averages. Basically, no one gets excited above a certain level. I think it has another week of bullishness to cash out right here at 110. I think it wants to tangle with those early October highs. I don't think this is done yet. And overall, when you get 52-week highs in bonds, lower rates, that's going to have a little bit higher demand in the home builders, the home construction space. So I like it. I like that it also didn't get oversold here. You're going to have seeing this set up in a lot of different charts. I like that it's starting to stabilize. Once, if you want to be a lazy trader on this, the 200-day is now starting to flatten. It's actually starting to go up by a penny a day at 99.83. This looks like it will be headed to about 110 in about a week's time. It's going to have a little bit to wrestle, like I said, here with 106. And that will get you that thrust above 50, which you really need above that 51 RSI to say, hey, there are things looking good in this spot of the shopping line. Let's see what people are buying here, and then that should take it to about 110, and then that's going to get pretty tired considering it moved from 100 to 110. But that chart looks good. It is continuing, and then I expect it to slow down. It could slow down here for a bit, 106 on its way to 110, but I do think it has a little bit more momentum left. XLY is the next chart they were buying today, up 1.25%, I believe. Yeah, 1.25% at the end of the day. This was an all-time high for this group back last month at 243, and then boom, a quick move down to 229, and now here we are at 239. A big day for consumer discretionary, up 1%. That's about a 1.5 standard deviation move, hence why we are looking at it. I think this too has another nice week of bullishness. Again, I'm pretty bullish right now. I like the setups in lots of places. Usually what that means is that probably happens, or I'm not right all the time, obviously. But the other thing is would be early, and it probably takes a little bit longer. So that could be it as well. But I'm seeing some nice setups. We were talking about it on Spaces today as well with Steve Straza. The spec stocks look absolutely great. RK, your year-over-year leader in terms of percent return, and it's setting up right here, I think, towards new all-time highs in the next 2 weeks incoming. So a lot of charts look good right here. I'll tell you when I'm bearish. I'll tell you when I'm bullish. This looks good. This looks like it wants to go to 245. So another $6 or about 2.5% for XLY on its way to it. And again, the all-time highs are right there at 243. I think it overtakes it. Again, this is the Amazon, Tesla, Home Depot fund, essentially, is XLY. And a couple of those companies are reporting soon, so you have catalysts. And the next one, again, we talk about the DIA making all-time highs. The XLI today, a big move up 1%, call it 90 bips. These guys put in highs on October 9th, and now they're getting very, very close to it. Industrial's very remarkably big, great looking chart. I think this group looks really good right here. It would be really great if you were able to get in under 153. To me, the target is 158. I think this has the momentum, and this will have new all-time highs incoming, which more than likely means more new all-time highs for the Dow, which I guess is your Uncle Bill saying, "Oh, I'm crushing it in my Dow stocks," because he is, Bill. So this looks good. XLI, wonderful. This is like setting up here. If you have a give back in the short term down $2 to that 153, I would consider like a 153, 158 November call spread. You got $5 of like risk right there. I like that trade. You can also buy, the 60 delta calls, or you can sell some of these 153 puts. I don't know how much you're going to get paid in that, but some strategies for XLI. All right, let's look at some of the other downside here. Everyone talking about the major mover. 3 standard deviations lower today is G to the L to the D. That I didn't spell gold wrong. That's the ticker, GLD. Just a comment here. Okay, we're talking about how overbought this was from September 2nd until October 20th. That is a very, very long time of excellence. That also took the price from 320 to 400. Okay, the 400 people said, "Okay, I'm going to cash this out a little bit for now. That's a great time to ride the train." I took it several stops to where I got to go. Now I want to smell some fresh air and maybe see some sunlight, and then I'll get back on the train to get me back to where I have to go because the narrative hasn't changed. So I love the gold story. If you have a similar thrust or a mood breakdown of what you had with the S&P, on October 10th, you can get even to like a 46 RSI. Obviously, apples are not oranges, but you did get a similar push lower back in mid-August, and that's the lowest it got here. 40 takes you back the entire cycle. I mean, going back to last Thanksgiving. So it's been, somewhat pressure to the upside, obviously, in gold. There's so much energy once it finally broke above 320. It took a long time. This trade, in many ways, started on Labor Day. If you want to be a lazy trader, again, what you can look for is when you register 70 RSI as well as a breakout, there's a sentiment change. People view that asset differently. It is literally overbought to an extent, and it's at new highs. So there are people lining up for something technically new. It's not a new asset, but it's a new view of an asset. That's just fact. No one started at 320, and now there's a long line of people willing to pay 320 plus, and we have been that way ever since. So as I get to the gold chart now, we peaked yesterday at 403. Goodness gracious. And now here we are plunging. Also, look at the big volume there, the biggest volume in the entire year in GLD. So really, everyone who wanted to, this was on the 17th, on the Friday. So everyone who wanted to be in took it to 403. And then basically, there's lots of bag holders for the time being if you entered on Friday. All that being said, I'm bullish on the market on beta. I love spec stocks. I love, we'll look at, like I said, XLY, XLI. I don't think they're going to be just massively pulling the buy button, pushing the buy button on gold right here. I would stay out of the space for about 2 weeks, to be frank, right around there. And I would love an entry, and I think you might just get it right around 368. It's convergence of the 21-day exponential moving average, and as well as just this middle Bollinger Band on a 20-day. I just think it's meaningful, but I would still give this time to correct in terms of time, not price alone. But for me, we're about $11 off, so I like it to the tune. I still think it isn't done to the downside. I would start sniffing right around that area. Could it get lower? Yeah, in terms of levels, if things get ugly, it could get to 350, which is its 50-day moving average. I don't think it goes far lower than that. Those would bring you to those levels first reached just 2.5 weeks ago. And then I think but the buyers would step in because the story has not changed. But that's GLD. Stay out of the space. Let the dust settle. The only other thing commenting on this is they descended as low as 370 6 today, and they bought it up $3. 1% off the lows. It was down 7.5% at the lows. But I would give this time to settle about 2 weeks ish. Right when that market, when I'm looking for highs in the market to flip around that November 2nd, 3rd time frame, then this probably looks really marvelous again. If you get it sub 370, I think that's a great setup because it looks headed. Again, last thing on this, the high frame target for me on this was about 380 or 385. I thought this got overdone about 385. Markets obviously don't have to do what they want you to do. And I mean, this thing was 85 RSI going into the highs. So this wasn't hype. This was really true buying each day. And they really have been buying this thing absolutely all year. That's my call on gold. We're going to talk about other metals. So let's just keep it going. Silver down even more in a percent basis, down at the end of the day, down 8.25%. So take a look at this. Silver 49.25 on the 16th. That's Thursday. And here we are now trading below the 21-day exponential. And here we are at 52 RSI. It's held in above 42 essentially since the lows of April. SLV, folks obviously, of course, play both. A little bit different leverage in SLV. I would give this about another 10-ish days to stay out. In terms of entry, it's probably going to frustrate you, but under $44, I still think will reward you as the target is 47.5. So you're probably early if you buy this first thing tomorrow. But because the pain trade obviously is in the metal, so this can go and flush you out harder, lower. So if things get ugly here for silver, I do see a move down to about 40. So you might be 10% too early, which if you're on options, you're absolutely going to bleed theta. I want to see if this flushes below a 50 RSI, see what you got here in mid-August when it really went under. Silver typically really, when it moves. Here it got to 43.30, and then they dipped it. They bought it 60 cents above the lows of the day. Again, I think you're probably early on this one. I would give about a week or so to shake out. I want it to correct in time more so than price. But to be frank, if you're in this under $44 even, which is where it closed today, I don't hate your risk to reward going forward if you want to get long in metals trade. Still like gold, but silver, not right now, but for the next leg higher. But silver looks absolutely great. After this flushing is over. Okay, and then the next move lower, one of my favorites. It's the market's favorite over the past year. I think it's number 2 actually, or top 3. It bounces around because of ARC and IBIT, but it's the GDX. I like the GDXJ, but this GDX down 9 and call it 0.5%. This, we were talking about how massively overstretched GDX was, and one day you'll wake up and it'll be significantly lower, and that was today, October 21st. So this looks a little bit different though. This has done a lot of pain in 5 days. So this is going from $85 all the way to a low of 72, and then they bid it up. And look at the RSI here at 47, still holding where it's been all the way since May. So really nothing, and to me, changing tact. For me, in terms of entry, I think you're getting really, really close. I don't think they're going to give you below $71. So then in terms of risk to reward, I think we're going to very soon spend a lot of time at 77 basing before going higher to new all-time highs. I don't think the story's changed. It got a little bit too hot, and that's okay. It's one of the year-over-year leaders, and it just ran off a 6-week overbought reading. So trees don't grow to the where we're looking for is sky. And I love your entry under 77. If you get 71, if you're able to get that gift on, I think there's a chance I would enter with a 71 80 December call spread, or probably 73 80 call spread December. You can look at that. You could also sell those 70 puts. You'll probably get paid on that since there's a lot of fear, a lot of overdone into this. Just also another thing, these guys are reporting this week. Curious setup, Newmont's reporting. There's a lot of the big gold miners reporting. There's some of them are off cycle as well, but there's a lot of big miners, which is what we're talking about. GDX reporting this week, so look out. There's big reports everywhere this week. But that is my story on GDX. A big move lower today, down nearly 9.5%, sent all the way to levels not seen since September 22nd. Oh my gosh, great balls of fire. So yeah, I like the setup though. If you get 71, that would be really, really amazing. That's GDX. Okay, next, top 3 gainers of the past 5 days. What has been the more short-term trend over the last week? Nat Gas, your number one gainer. How about that? Up 10.5% over the past 5 days, or an average of about 2% a day last I checked. And today doing just about that, up 2% a day. We have a note here. I said on September the 25th, I said you Nat Gas bulls, you know who you are going to enjoy a nice 2-week run. And that was right here on the 25th. Spot that day was 12.5. And then it went to $14 on a clean rejection there. And then it went on to new 52-week lows just 5 days ago. And now right over the lows, a nice surge. Also want to comment, 52-week lows, not even oversold. So don't really want to buy into that. Actually, on the 52-week low here on Nat Gas, the RSI is 35. So that is lopsided to me. You get that rubber band go and stretch the other way. And Nat Gas, ooh la la, what do you know? The best performing ETF of this past week. Guess what? It's going to have another nice 2 weeks. It looks like this is going to head towards right about 1390. It will likely not surpass that October 2nd high, but it will try to do that. You're getting some nice vol expansion as well. Nice looking candles off of those 52-week lows. This will head, it very, I think, looks like to $13.75 to $14 over the next 2 weeks. Again, 200. I don't want to be in this long term. The 200-day moving average has continued to go lower and roll over since the end of June. So not interested. Also, kind of just a proximity filter rule I have in terms of swing trading. I don't really love getting into things that hit 52-week lows this week, although this one is a divergence with not getting confirmation here on oversold. So this one looks like a little bit more to go. A nice 2 weeks for Nat Gas. It's already begun because it's had the nicest ETF week of any ETF. Number 2 is XBI, up 4%. Congrats if you're in these. You are going the proper way. And this is a great reading. Look at this. So again, we said energy. Where's all the energy in this chart? A lot of energy to be taken several levels. But what I'm really looking at here was October 1st. First overbought reading, and that is a breakout closing in on the prior 52-week high from last November. If you remember, this is when Kennedy after Election Day, it was put in as the health czar, whatever the title is, and it sent a lot of healthcare, and specifically the biotechs, from 105 all the way down to 91. And it really went lower the entire time, bottoming with the market in April, has not really recovered until a couple different points mid-August. And then you could, confirm once you got a prior, of course, once you got above the prior highs. And here, 52-week high just 5 days ago is the XBI. So XBI having a great week, up 4%. Today, down 0.5%. It's just a little bit overbought for me. I would much rather own this around, if you can get it around 104 to 103 level. I think it does have a nice bullish 2 weeks. I think a lot of green in the next 2 weeks. It might be stopped. Fits and starts, but I do see a lot of bullishness in the market. I would look at your wish list. This is just a little bit overbought. I don't like these straightaway candles in terms of entry and chasing. And to me, to the top side, my target was 108 to 109, to be frank, in the beginning, to begin with. So much rather like this if you get spots, pick them down to 104 and then get in. Okay, and then the third best week of any ETF, Brazil, continues. We were talking about this last week. I don't breathe when I do these things. Brazil up 3% over the past week. So again, it's Nat Gas up 10, cash flooding into there off the 52-week lows. XBI, risk on, up 4%, and then EWZ up 3%. These guys peaked 52-week highs in late September here at about $31, $31.50. And you see a flush down October 10th when we had that big, global scare, if you will, a big bearish engulfing globally. October 10th, and now a nice move 29 all the way to 30 quarter. And here we are today down 1%. EWZ having the third best week of any major ETF. Now what? I like this one. It's going to be a little bit choppy. I like this one, though. This is going to also have another bullish about 10 days or so through about Halloween, getting very close to those prior 52-week highs. I have a target right around 31.40, which is on the nose, basically the 52-week highs. That's another $1.40 or so. So nice movement here. Not a great close, the past 2 days, I would say, in terms of action. But again, guys, third best ETF week of any. So I like this. And this was like it's closing on 52-week highs. So we have lots of great looking charts here. We got home construction for a little bit, consumer discretionary, industrials. Let the metals pull back a little bit more. You got Nat Gas going higher, biotech, Brazil. lot of different things. That is bullish. When just the piece of the pie gets larger, it's going to flow to more places. It's simple as that. And Apple's getting it today, guys. We're going higher. Don't be short. Be careful there. It's silly. Top 3 loser the past 5 days. What is losing money? So we haven't looked at this chart specifically. Worst chart of the past week, and honestly, I'm thankful for it because it's a gift. It's what we've been waiting for better entries. GDXJ, the worst week of any ETF, down 8.5%. I do open to close 5 days. Today, down 10% at the end. Guys, let the dust settle. To be frank, I'm saying that a lot today. My name's not even Frank. I love entries under $100, so I think it's going to snap back quick. Again, the RSI here, 47. If you go a little bit lower, I don't think they're going to give you below 92, so you're getting pretty close. And then I think it's going to tangle with $100 for a while. So that's basically my call. I think it's pretty realistic. I think it's what's going to happen. So let the dust settle on this. Probably choppy, and then it sells possibly with a low of 92. If it does, I would get in. This is your year-over-year winner. This is it. Okay, again, just from last New Year's Eve, $42, and then you take it to 112. That is your ETF winner. It's not IBIT. It's not ARK. Those guys are pretty close. This is it. I have to check actually after the movement. It actually probably fell. We'll have that on Friday's show, but they're all neighbors in the top, in the Hall of Fame gang. So that is it on GDXJ. The worst week of any ETF. Let's look at number 2 because it kind of contradicts that. It's volatility. So things got too hot. People thought volatility was back. As par, yada, 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 and more yadas. For me, looking at volatility of the chart, and I think we actually commented or had this in the video. That's why I like calling out VXX in the when it comes up in the standard deviation filter charts that I have. On the 9th, I said, get ready for a pop here. So here, VXX was $33. I said, this will head to $36. We got by the 24th of Oct, which was last week. Instead, we got, so what was the level I had said? I said 33, and we're going to 36. We obviously did it more than that. It went to 41 on the 17th. So it went higher and earlier, as volatility tends to do. And now it's having the second worst ETF. You got GDXJ, which is an absolute superstar. So they're cutting a little bit of whipped cream off the top of an absolute star that can deserve to lose a little bit of the top. VXX getting cold and having the second worst week is totally different and is absolutely bullish. Here, you can see it has, you can count the number of sessions it has above a 50 RSI. Here, anyone that wanted to get into volatility, kind of the dumb folks, or fairly short-term trades, on October 10th got in, and that was as good as it got. They got in there and most likely held the bag because they most likely got in at around 36, and here we are at 34. So volatility, to me, will have a nasty 2 weeks. Of course, I'm preaching bullishness in the market, which is going to be bearishness for volatility. So this to me looks like a target of right around, so again, the 52-week low is 32.60. My target for the next 2 weeks is lower than that. I mean, you can see how close we are to that, and there's no way to take new 52-week lows in volatility bearishly. Let's be real. So let's be real. So props, shout out Weird Al. So yeah, I have a 30. It's sub. Let's put it to you this way. It's definitely sub 32.60. I'm looking at about 30 half in the next about 2 to 3 weeks on VXX. So that would be a 3 handle off about 10% for volatility, and it's already down 7% just in the last 5 days. It's begun. And then the third one, which began this whole scare on Friday. I didn't mean a global scare, but we had a lot of bearish engulfing. It was stemmed from the regional banks on Friday. If you recall, regional banks down 6% on Friday. Very scary. We talked about it on Friday. I said, I think this 58 will hold, and then it will recover. This 200 moving average, I think, is a wall at 60. I think it'll recover, and then it'll probably head towards 62.5 before it gets a little bit tired and gets exhausted. Carry has had the third worst week after the gold miners, which is a winner, and volatility, which is an absolute loser, just coming off of 2 week lows. The carry chart looks a little bit messy here. So for the next, as I do 2 to 3 week targets, as we're looking at the strengths of the other areas, things that have held 50 RSI for many days, weeks, months, this has not held the 50 RSI since September 22nd, 1 month here. So folks have been just saying, I'd rather be a better seller than buyer, essentially, for 4 weeks. I don't love that. And the price action then was 64. And here we are now at 61 with a low of 59. Messy chart. I do think it goes higher with the bullishness of the market, though. You got to always understand where you are in the environment, how much it's about 70% macro. I think Druckenmiller, one of the goats, said it's about, I think, 70% macro, 20% the sector you're in, and 10% the stock you're in. So I believe the tides will lift this higher again, but it probably hit its head right around that 50 RSI, which is going to equate right around those 21-day exponential moving average and the middle Bollinger Band mark I have right around 62.5. So probably a nice 10-ish days or so, and then it will stop at 62.5 or so. But it's going to be a tailwind for the market. They'll take it as confidence. Okay, top 3 trades of the past 5 days as we wrap up here. If you've been long nat gas, short gold miner juniors, one of the best winners of the entire year, and then short volatility, one of the biggest losers. What a great mix up there. Long UNG, long into a loser, short GDXJ into one of the best of the year, and then short volatility, another loser. 2 out of one reversal trade, another reversal trade, and then a continuation trade. Always keeps things interesting. We'll be back tomorrow, and then we'll take a look at stocks with a year-over-year recap too on some of those big moving monsters. Peace.